Over the last 30 years of trading the stock market, I've found there's some little tricks that can have a big effect on your performance in the stock market. And this week, I'll share with you 3 of them. Plus, I'll do my regular market analysis. We'll figure out where the stock and bond markets and commodity market, currency markets are likely to head. And then at the end, we'll look at the day trade of the week on AAOI. Okay, so what are 3 tricks that can help you do better in the market? Well, they're 3 pretty simple things. Whether you're a day trader, a swing trader, even a longer term position trader, these 3 little tricks will help you do better in the market. So the first one is to buy stocks with a buy stop at a confirming price level. Now what that means is, let's say you bought a stock on a breakout, and the closing price on the daily chart on that breakout day was $10. Rather than just buy it, I will put a buy stop. In other words, it'll buy automatically if the stock trades above $10. So I could put a buy stop in at 10:01. That way, if the next day or in the next bar, if it's a 13-minute candle or a 15-minute candle, if the next bar opens at 9.98 and starts to move down from that point, I'll never get filled. It's sort of looking for that confirming signal. And I have found that this has saved me from taking on losers many times. Maybe 15-20% of the time where I have a good buy signal, using this buy stop concept, buying at a penny above my entry signal price, will keep me out of the disasters that fall down right away. And that does happen sometimes. Now the next little trick is putting stop losses at a price level established by the past. Now I'll make this more clear when I look at a chart in just a moment. But the idea here is, don't set your price stop, your stop loss order, based on some arbitrary rule like, I don't want to lose more than 10%, or I don't want to lose more than $500 on this trade. That doesn't make any sense because it's not based upon the market's opinion. The better way to set stops is to look at the recent price history of the stock and look where it stopped going down and started going up before you bought. I call that the inflection point low. And again, I'm going to show this on some charts in just a moment. But if you put your stop just below that inflection point low, it's at a price point that is based upon the market's opinion. It's not based upon some arbitrary number. It's based on the trading activity of the stock where the market has established a floor. Now the last little trick that I'll show you is probably the most important, and that is to focus on abnormal volume and abnormal price action. Because where there's abnormal volume and abnormal price action, there's often an exciting story that has captured the market's interest. Now, I like to trade what I call alpha stocks. These are the stocks leading the way in the market. And the footprints of alpha stocks are abnormal price and abnormal volume activity. And let's take a look at a chart to really emphasize this. So here's a stock that's done very well over the last month or so, moving from $2 all the way up to $11.50. But it took interest, or I took interest in it again on Friday, because it started to behave abnormally again. It had been moving downward for the previous 2 weeks, and then look at the volume on Friday. Look at the volume or the price action on Friday. Now it becomes even more obvious when you look at the intraday chart. This is the 13-minute chart, which I like to use for swing trading. See the volume on the opening bar of the day and the price action on the opening bar of the day? That told me that the market had an interest in it. And that's the key thing. It tells me that it's an alpha stock. And where there's alpha, there's opportunity. Now I'm going to return to this stock when I look at the day trade of the week at the end of the video, so make sure you stick around for that. But we see here the abnormal action that tells us to go look at that stock. If we were using this as a swing trade and we're going to buy on the break through this price level, then you buy pretty much immediately because it moved above. It gave that confirming signal almost immediately. And I would put the floor price on this stock right here at the low of the day. You could go all the way down to this inflection point, but because this stock had a big price gap, I would put the stop here. So you buy here as a swing trade, your stop is here. At the end of the day, it's up about 2 times your risk. If the risk is the difference between your entry price and your stop loss price, then you can take that distance and extrapolate it up. It's just a little under 2 times. Now again, I'm going to come back to this example at the end of the video because it was also a great day trading candidate on Friday. But now let's jump into the market analysis for the week. We saw a little bit of weakness this past week. Does that mean there's a crash coming or bigger correction? Well, let's take a look at the charts because they give us all the answers. So we'll jump over to my website, stockscores.com. You see here the breakdown in the market early in the week. You can see this little upward trend line broken on Wednesday, and that was the first sign of weakness. And then we started the pullback. So is that an indication that there's bigger problems ahead? Well, for that answer, I like to look at the longer term chart. So let's look at the 3-year weekly chart. And what you can see there is we're really not in a bad situation yet. There's the upward trend line. We're having a pullback week. The market has made great gains through the summer, and it's probably due for some profit taking. It's also hit this resistance level right here, which is a reasonable place to start that profit taking. I think that we could very well pull back for a little while before making another push toward those highs. So in the short term, I think that it's likely that we'll see a little bit more weakness, but I'm not overly worried about it yet because the market hasn't broken down from a falling top. It hasn't even broken the upward trend line yet. It could bounce off of that upward trend line very soon. Now let's take a look at the small cap stocks in the US. IWM is the symbol there. Let's jump to the 1 month 60-minute chart first. And you can see that it didn't really have the same kind of breakdown as the S&P because the small cap stocks have really been stuck in this sideways trading range while the S&P was moving higher. So large cap stocks, mostly large cap tech stocks, have been moving up through the month of July and into August, but the small caps have been going sideways. And therefore the small caps don't have as much ground to give up. It may be that they'll hang in there a little better, but if we get a breakdown through this floor on the IWM, then I think we're going lower. The question is, how lower? Well, let's look at the 3-year weekly chart, and you can see that the upward trend line here sits about there. And so to have a pullback into the 190 level on IWM is pretty reasonable. Remember, this market has risen up to this resistance level that was hit here and slightly higher here. When markets rally into resistance, they usually get stuck at resistance. It's a simple rule that you can use over and over again. And so it's reasonable, given the gains of the last few months, it's hit resistance. Yeah, good chance it's going to pull back for a little bit. What that means is that it's even more important to trade alpha, to trade those stocks that are trading with abnormal volume, abnormal price action. Because alpha stocks don't tend to be as correlated to the overall market. They're moving on their own story. All right, let's jump to the Canadian market now. T.XIU is the symbol for the TSX 60. There's the daily chart. You can see a little bit of weakness. In the context of the intraday chart, there it is, much like the S&P. It's essentially sideways, a little bit of short-term weakness, but it's not a major breakdown yet. On the 3-year chart, it looks very similar to the XIU, where it's stuck in the sideways range and it just keeps bouncing around in it. And maybe it's headed down to the bottom of that range before it tries to bounce higher. Well, the Canadian market is heavily based on commodities, and so we like to take a look at gold. Here's the 1-month chart. Slight downward move over the last 2 weeks, but in the context of the last month, it's more or less flat. 3-year weekly chart. A little more of a concern here because there's your upward trend line. It broke the upward trend line here, but not from a falling top. But now it's built a falling top. And so if it can now break this upward trend line from a falling top, that would point to a likely pullback in gold that could take it down to there. That hasn't happened yet, and so I don't think we need to be concerned about it yet, but that could change on Tuesday, Wednesday next week. It's very close to that breakdown point. What about oil? Well, oil is interesting because it has actually been showing pretty good strength through the summer. There you can see the nice rally in oil, and it's just now gotten through that resistance level. It stalled there for only a day before it broke through. So oil's looking pretty good. Let's take a look at that 1 month chart. You can see the upward trend line in oil, and the result of this is we're starting to see better charts in the energy sector. So if you're looking for a sector to start considering for buys, I would take a look at the energy sector. I've seen a few stocks this past week that are starting to turn, starting to reverse their downward momentum, build upward momentum. The actual stocks are lagging the price of oil, but that's typical. And so let's keep an eye on that. Looking at the 3-year weekly chart of oil, it's not great yet. It's just starting to get through this resistance level, but it's got resistance here as well. So I don't want to overstate it. I think it may be a little choppy as it tries to go higher, but the momentum is turning. Now let's take a look at the US dollar, which has a big effect on these commodities. And the US dollar rising is perhaps one of the reasons that gold has fallen. It's really stuck in a sideways range for the last 6 or 8 months. Looking at the 1 month chart, a little bit of a move upward, but a critical move to the downside on Friday, and that may mean that we just go sideways here. So I don't think it's an easy one to call on the US dollar. But what about crypto? GBTC has also been quite quiet lately. It's still in a longer term upward trend. If we look at the 3-year weekly, you can see that longer term upward trend here. There's your upward trend line. And so maybe it's going to pull back to that and then bounce off of it. I think crypto is trying to move higher, but it doesn't have the energy that it had, back when it was really moving back in the 2020, 2021 zone. So it's not bad. It's pretty good, but it's not exceptional either. All right, the last chart I want to take a look at is that proxy for interest rates, TBT, which is a leveraged ETF that is short the bond market, the treasury bond market. So if this goes up, interest rates are rising. And you can see a pretty significant rise here this past week. That means the market is starting to speculate that there may be more interest rate raises from the US Fed. Not on heavy volume, so it's not a real strong opinion, but I do think that's something to keep an eye on. Here's the 3-year weekly chart, and you can see we've just broken out here. Is this meaning that we're going to see the bond market go down, which means interest rates rise? I think that's a factor that could contribute to the market making a pullback. We've seen a little bit of a breakdown in the market, so that may be the cause, is this speculation that the Fed isn't done with raising interest rates. All right, let's take a look at my ratings then. So US large cap stocks, short-term neutral, long-term bullish. You can see the rating for small cap stocks, Canadian stocks, and gold, all neutral on both time frames. Oil bullish in the short term and neutral in the long term, but that's improving. US dollar neutral on both time frames. Bitcoin long-term bullish, short-term neutral. And then interest rates bullish in both time frames. The market is predicting that rates are going to go up a little bit, and we'll see how that pans out. All right, let's get into this week's day trade of the week. Earlier in the video, I said I was going to talk about AAOI, and let's highlight some of those points that we talked about at the top of the video, where you've got the abnormal volume. That tells us it's alpha. That tells us the stock is in play. Then what we look for is a break from a predictive pattern. And we've got that right here. There's my action candle indicator, which we use on Active Live, a service that we offer from Stockscores.com. You can learn more about that at Stockscores.com. The buy signal is there. You put your buy stop in at that price, and for the next 1 minute, you don't get filled. But then you get filled right here when you get that confirming signal. So your entry is there. Your stop is just below support, that market-defined floor, and then you wait and see how it works out. And in this case, it didn't work out phenomenally well, but pretty good. By the end of the day, it was up about 2 times risk, which means if you risked $500, you made $1,000. If you risked $100, you made $200. All of that risk management, expected value, strategy rules, those are all taught in the Active Trader course from Stockscores. You can learn more about that at my website, stockscores.com. I hope you've enjoyed this week's Market Minutes video. If so, click on the like button, leave a comment, but most importantly, trade well.